Tesla has been in a surge over the last 2 days after being added to the S&P 500, and yet again today we had another catalyst from Morgan Stanley, raising the stock price to $540 a share. This is from the previous $360 price, and there's even a rumor that Warren Buffett is buying Tesla. In this video, we're going to talk about all of this and more. If this sounds like something that you're interested, don't forget to subscribe and hit the bell button to Electric Invest, where we talk about EV companies, and Tesla is one of the major ones that you do not want to miss about. So with that being said, let's begin. As of right now, Tesla did end up passing the 500 mark, but there seemed to be a lot of profit taking for some of the people, and he brought it to right around the 497 mark. Not much was happening with the stock itself, but as you guys already know, a lot of things were happening behind the scenes with Tesla. Just because the stock price doesn't go up does not mean that Tesla's not doing anything. And that's something that us long investors already know. But that's completely normal, that's completely understandable, but it's a good thing that Tesla finally broke in. Earlier today, the second catalyst aside from the S&P 500 inclusion was a Morgan Stanley analyst called Adam Jonas, who upgraded the stock to an overweight equivalent, raising his price to $540 a share from $360. Now, Jonas wrote that Tesla is on the verge of a profound model shift from selling cars, volume times price, to generating high margin, recurring software and services revenue. He argued that the company car business provides an entry ticket into unlocking much larger total addressable market. The company already gets some services revenue from things like premium infotainment and performance upgrades over the year. And Jonas estimates that these businesses account for about 1 to 2% of Tesla's revenue today. By 2030, services could account for over 6% of revenue and 18% to 20% of earnings before interest, taxes, depreciation, and amortization, he said. So basically, right now, Tesla is getting the recognition that it needed. They're starting to see that Tesla is not just a car company, and they're basically seeing that there's a lot to the business side of it. You know, the revenue that Tesla already makes from the infotainment, having the internet services and having shows and video games that you can purchase and play inside the car while you're parked, as well as performance upgrades that give you extra speeds, as well as the full self-driving software, which in case some of you haven't already know, the beta version 11 has been going on, which will soon have the capability of having conferencing calls where you can even go on Zoom calls through your Tesla, the autonomous driving possibilities and the revenue that that brings. So analysts right now are starting to discover what a lot of us already knew, a lot of us Tesla investors already knew for such a long time, that Tesla is not just a car company. You know, they build their own software, they build their own hardware, their own chips, their own solar panels, their own solar roofs, their own materials, because Tesla even made its own special alloy to be able to use on the biggest, largest casting machine, which is the largest casting machine on any vehicles on Earth. So that way they can eliminate hundreds of parts, saving costs. And they had to build their own alloy because the larger the casting of a metal, the more you need to cool it. By the time you cool it, it ends up cracking and breaking, and it's just a lot of procedures that goes into building the right materials for the vehicles. And there's just so many things that Tesla is doing. It's not just cars. I mean, even the robo-taxi is estimated to be a $1 to $2 trillion business in the future. And I know that Tesla is not the only one aiming for the robo-taxi autonomous driving concept for the ride hailing. I understand that NIO and possibly maybe, who knows, Xpeng, the Chinese company, might probably get into the business, but Tesla right now has the competitive advantage that at least they started earlier than everybody else, and they've been ramping up and having more data than everybody else. So I just wanted to make it clear that this is what's happening, and this is one of the major reasons that the stock rallied over 10% today. I saw this article from Electric, which is a very reputable source for Tesla and EVs in general, and they normally don't talk a lot about rumors, but when they do, those rumors tend to be some pretty good educated guesses. And as we can see right now, they're saying that even Warren Buffett is rumored to be buying Tesla. I don't necessarily think that this might be true, but the S&P 500 definitely will mean that a lot of people are gonna have a little piece of Tesla, whether they like it or not. Because if anybody is invested into the S&P or any other index fund or ETF that tracks the S&P, whether you like it or not, you're gonna have a little piece of Tesla. And I'm pretty sure that sooner or later, Warren Buffett is also going to end up having a little bit of piece of Tesla indirectly, one way or another, unless he purposely doesn't like the idea and cherry picks his way out of the whole deal. I don't know if that's gonna happen. This is just a rumor. But according to Electric, over the past 2 days, since it was confirmed that Tesla will be added to the S&P 500, the stock has been surging. It went up 8% yesterday, expanding gains to today by now an additional 10%. The 10% happened by what I already mentioned, with Morgan Stanley's target of $540 a share. But let's continue. So the result is that Tesla added now around 80 billion in its valuation. That's true. So Electric goes into saying that an interesting theory is that some big investors are now heavily investing into Tesla. And a particularly interesting theory is that famed investor Warren Buffett might be investing big. Again, this is not confirmed, but it is pretty interesting that Electric is pointing this out, because this gives us an idea of what the big dogs, the big whales in the market are thinking about Tesla. Maybe now they're starting to think, well, Tesla is starting to become a little more of a major player, a little more of your Apple, your Facebook, one of those big players in the game. So they go on saying also that Frank Peelin found that about 50 million Tesla shares have dispersed into the hand of currently unknown investors based on the 13F filings, which disclose large ownerships. This is particularly interesting in the context of Berkshire Hathaway, Warren Buffett's investment firm, filing for a confidential investment in a new company that it did not want to disclose in order to not overlay effect on the market. The new investment could be worth around 11 billion. An investment of that size would most likely result in a more than 5% ownership in most companies. There are only 25 companies listed in the US exchanges big enough to not reach the threshold, and Berkshire Hathaway owns 9 of them. Tesla will be one of the few companies big enough that the investment would make sense. This is a pretty interesting thought, because it is extremely suspicious that such an investment so large like that would happen. So what do you guys think about this information? Did you guys invest it into Tesla? Do you guys buy into the rumors that maybe Warren Buffett has been purchasing some shares of Tesla? I would love to read and respond to your opinions down in the comment section below. You've been watching Electric Invest, and with that being said, I'll see you guys next time.